You don't have a recession in the United States until, what, 2023?
Right.
So I'm wondering
April
where you think... You're very specific. I have to say, I noted that
right.
Incredibly specific date,
right.
and I've already jotted it down in my long-term diary.
Okay.
Where do you think... we're at 2.25 now. Where will rates be at that point?
So I have, I think, Guy, I have a chance of studying economic factors and coming up with the most likely date for recession, which, let's just say, is years out. And that's also because I meet with investors constantly. This is not a topic that I get a lot of pushback on. People are now beginning to think that it's a ways out. And some of the factors that argue for that, as an example, would be that once the growth in earnings peak, S&P earnings, which they peak around 25 or 30%, the recession is 2 or 3 years out after that. And once average hourly earnings start to go up, they hit 4%, and then you get a recession. And right now they're 3%. So I think the economy today is quite good. Let's say consumer sentiment that came out a few minutes ago would underscore that. Yep. I just walked over to your lovely office this morning, and I felt like I needed a hard hat because there's so much construction going on around here. And that's true for almost every city I visit. So the economy is doing well, and I think it will slow next year to something like 2.25. And the recession, then it'll just keep going, and I'll monitor that every day.
But Ed, do you think that the Fed keeps tightening during those years?
I doubt it.
Where do you see Okay, so where does the Fed stop? Because usually it's the Fed that breaks the economy, right?
Yes.
And then you get a recession that kind of follows on from that. Yeah. You get an inverted yield curve. There's a whole bunch of things that could happen. Right. So where does the Fed stop? Because people there's a bunch of other people out there that are talking about a recession in 2020. Right. I've heard people talk about that a lot.
Me too.
And they see the Fed see the Fed stopping before that.
So my guess is that the Fed does not. Forget Trump for a second. The Fed does not want to precipitate a recession in 2020. And they know that there's a fiscal cliff, or the fiscal stimulus falls off a lot in 2020. And so I think they might do a better job of communicating that they will be data dependent as opposed to being on a march toward raising interest rates. But as it's a dynamic situation. And one of the examples of that is this big drop in oil in the past couple of months that's changed the inflation picture. And so I tend to agree with Larry that they'll be watching the data, and if it's a little bit weaker, and inflation is low, then they could easily take a breather, call it whatever they would like to call it.